Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, checking in on the technology sector, and the technology sector continues to be one of the strongest sectors here, and it's holding up the S&P 500 in my opinion. Barely holding it up, but it is doing a good job staying on top, and you can see XLK here. Still the potential that it is a bear flag as long as these exponential resistances reject the price. That will remain a possibility, and that comes after a dump, a short-term weak bounce attempt, and then continuation to the downside. And we saw the S&P 500 on the verge of that continuation to the downside, and we did get it by 9 pennies on SPY, but obviously that was not significant, and the bulls did buy that dip by the end of the day. But it is still a possibility here on the tech sector, so we'll be watching very closely. Our new resistance is 53.16, the high here, and in terms of support, it's 52.66 and 52.55. So still a bit of weakness here. The bulls have not proven that they have recovered strong from that dump, but like I said, they are holding up better than other sectors that we are watching. The weekly time frame is the most bearish candlestick that we've seen in 2017. It's a bearish reversal candlestick, and what stands out is the volume. Highest volume that we've seen in 4 months. So the volume belongs to the bears. We are still holding these exponential moving average supports, and we're going to be watching for the confirmation of this bearish reversal candlestick. If we get another red week next week, it will be the first time we have confirmed a bearish reversal candlestick since the election. So that would be significant, and we would look for a bit more follow through to the downside. We are seeing the RSI begin to cool off. We're seeing this MACD level off, and it's going to begin sloping to the downside if we see some further consolidation. And if we look at Apple, we can see Apple is seeing a bit of weakness as well. And it's all relative because Apple has been an incredible bull over the past 2000 and all of 2017. So like I said, it's all relative. The bulls are still extremely strong. As long as the middle Bollinger Band still holds its support, the bulls are in full control on the daily time frame for Apple. And we haven't even touched that level since the first day in 2017. So we do have a fairly weak close. Support is 140.35 and 139.73. And the middle Bollinger Band is going to be right around that 139.73 level on Monday. What stands out to me on Apple is the weekly time frame, and that's because of this very clear bearish reversal candlestick with a long upper wick showing profit taking and the potential for the first consolidation that we have seen in the past 5 months. This has been an absolutely base-ripping, whatever you want to call it, move to the upside, huge move with no consolidation. We had a couple weeks of a lack of bullish action, but I wouldn't even call that consolidation. So if we see a red week next week, we will confirm this bearish reversal candlestick. And again, as I pointed out, I think it was the last video, we could pull all the way down to 130 and still be extremely bullish on the weekly time frame. It's just the fact that we have not consolidated. We are very due to consolidate, and Apple has a very strong correlation to XLK, the technology sector. So we would have to see a bear flag and continuation to the downside confirmed on XLK for Apple to confirm this bearish reversal candlestick next week, as we do still have all weekly moving averages as support here for the bulls. Facebook is strong. And same thing with the middle Bollinger Band. As long as this level holds, the bulls are in full control. We hit the highest price, the second highest price we've ever hit on Facebook besides the all-time high day. So resistance is 141.02, 142, and 142.31, the all-time high. Middle Bollinger Band support held on a test Wednesday. That's going to continue ascending. That's going to be in the mid-138s to start next week. But the weekly time frame is also a bearish reversal candlestick. That indecision with the upper wick and the lower wick the same size after an uptrend does favor the bears. We've had a couple bearish reversal candlesticks on the way up that have not been confirmed, and that's why this confirmation is so critical, because it has not happened in so long. So we must see confirmation to be looking more significantly to the downside. And in order for both Apple and Facebook to confirm their weekly bearish reversal candlesticks, it's going to require losing their daily middle Bollinger Band support. So if we do not lose their daily moving averages, their daily middle Bollinger Bands, that is going to be a clear sign that the bulls are likely going to negate these candlesticks. So the daily middle Bollinger Band will be the signal as to increasing the odds of confirming these bearish reversal candlesticks. So that's what we're looking at for both of these very strong names in a very strong sector. Just cautious as bulls up here, as we do see the market weakness. We do see this big high volume pullback. Bulls are trying to turn things around, but not seeing an extremely strong bounce at this point. They are holding on well, but as of now, we are very cautious bullish, and we are looking to the downside. And if we lose the middle Bollinger Band on Apple, we'll be looking at some downside a bit further out, a couple more weeks, as we do look for that weekly candlestick to be confirmed. So a lot to be watching here in this coming week. Middle Bollinger Band is the key, and watching the shape of the candlesticks on the weekly time frame. I hope you have a great rest of your weekend, and we will see you Monday.